Welcome to Inside India. I'm Amitod Singh. Here are your headlines. The US finalizing controversial restrictions around H-1B visas, which will no longer be given on a lottery basis. How will this affect immigration and labor into the US? We will discuss that. Also, India's central bank announces it will infuse 32 billion of rupee liquidity over the next month as it keeps spending to support the weakening currency. And gold continues to shine, climbing past 4,500 this morning. The yellow metal now on track for its best annual performance in nearly 5 decades. All right, we're one day short of Christmas. We'll be bringing you all the season's greetings in just a bit. But let's take a look at how Asian markets are shaping up. Some of them have already decided to go ahead and enjoy the holidays. That's New Zealand and Australian markets. They've already closing early. Singapore and Hong Kong also on the way out for this time. Will close in an hour's time and will still stay shut until Monday next week. Remember, Australia's S&P sliding just about 0.33%, snapping a 4-day streak of gains. Some movement in Japan after news that Japan would issue about 190 billion USD in new government bonds to fund its fiscal 2026 budget. And Japan's super long bonds fell, rising to about 3.45%, and the 40-year rising to 3.715. And South Korea's National Pension Fund reportedly carrying out strategic foreign exchange hedging activities that saw the South Korean won strengthening over 1%, the Nikkei and the Kospi at just about 0.14% and 0.12% up, both of them. Spot gold prices focus on that, and silver and platinum. They're all seemingly hitting record highs. Gold did cross 4,500 per ounce for the first time. That's the big news. This as US stocks, they also rose for a 4th straight session, with AI names outperforming once again. The S&P 500 notching a closing record after a flurry of economic data, including higher than expected GDP numbers. Straits Times and the FTSE Bursa down just a bit, along with the Shanghai Composite. All right, the Indian markets, they're coming online in about 45 minutes. Here's what GIFT Nifty futures are indicating at this point in time. Slightly muted, but down about 0.16%. Expiry day did closed with small gains, but we're still expecting an overall, positive day. Not as much as perhaps yesterday. 26,231 is what GIFT Nifty is indicating, and we're looking at 26,177 from yesterday's closing. Lower trading volumes are, of course, expected this week due to the holidays, and analysts suggesting that markets should hold steady. The VIX fear gauge, the VIX fear gauge has also fallen, even if foreign investors are net sellers. Domestic investors continue to net buy, and the rupee has strengthened slightly against the dollar. There is, remember, RBI's action, liquidity infusion to consider too, and let's talk about that a bit, because the RBI, or the Reserve Bank of India, has said that it will inject about $32 billion of rupee liquidity into the banking system over the next month through bond purchases and a dollar-rupee swap. The RBI will buy government bonds worth 2 trillion rupees between late December and January, conduct a $10 billion 3-year dollar-rupee swap on January the 13th. Now, the move aims to boost durable liquidity, support the impact of recent rate cuts, and ease pressure on bond markets. Analysts say the measures could help push benchmark bond yields lower in the near term, and this is where the yields are sitting right now. The 2-year at 5.85, the 3 at 6.16, and the 10 at 6.633. Now, Daniel Lam is the head of equity strategy at Standard Chartered Wealth Solutions. So thanks so much for joining us, Daniel. There's a lot to cover. There's a lot that's happened, and there's a lot to look forward to in 2026. Firstly, happy Christmas. I hope you have a great year and great holidays with your family. I want to start by simply asking you about India's underperformance this year and what you see will happen in the next year. We have seen that stocks have trailed emerging market peers by the widest margin since 1993. The rupee has also slumped into Asia's worst currency. But you are still positive, I believe. Why?
Well, actually, we've just upgraded India to an overweight in our annual outlook. The reason why is because it has underperformed this year, and the valuation premium has shrunk by 60% versus the emerging market and also versus the Asia ex-Japan. It's still at a premium, but the premium has gotten much less. And the reason why it's so is because, well, there has been a lot of catch up from China in 2025. But we do see that next year, India can start to perform very well again versus the benchmarks in Asia. And the reason is because, first of all, the valuation has gotten less expensive on a relative basis. And also the fact that the policies from the government seems to be working, both from the monetary side and from the fiscal side in terms of the tax recalibration. So that has borne fruit, right, in terms of the latest Q3 GDP growth that beat expectations a lot, 8.2 versus 7.4. And the earnings seems to be recovering in the Indian companies, seems to have bottomed out. So that's the reason of the positiveness on Indian equities from us.
Okay. It's interesting you talk about the fact that because it's underperforming and there are these indicators in terms of reforms from the government and earnings improvements also, that's why you feel 2026 will be a different story for India. But we have already seen these reforms come in and play a role in the Indian markets. The earnings may not increase as much as perhaps is being indicated. So is there that aspect that you have also considered? What's the downside, let's put it that way, on your margin of error?
Well, basically, in terms of the earnings, it is probably not going to be as stellar as it was, say, 2 to 3 years ago. But nonetheless, we're still expecting a recovery versus what we've seen this year. And that's important because it is starting from a relatively lower base, right, which is rare for India, right? But it is what we're seeing for 2026. And in terms of the emerging market in general, basically what we're seeing over the last few days, even though it's holiday season, they should not be ignored, right? So you've seen gold and the precious metal going very, very strong, even during these quiet days. It's basically the investors starting to recalibrate their investments, getting prepared for next year. And what they're prepared for is a weakening US dollar. That's, what we're seeing from the DXY is actually broken below 98, quite sharply, I would say, even during this holiday season. Right? At the same time, we see gold rallying. And also we see that the EM currencies are generally starting to recover very well. You've seen Indian rupee coming off from 90, going to 89, and it seems to be heading towards 88. Dollar CNH testing the 7 mark, which is important. And in general, we see that because of the fact that people are diversifying away from US dollar and the US assets, the EM is, they are probably going to be benefiting quite well from it. And India is going to be a primary beneficiary. Yes.
Right. Where do you see Nifty 50 going in 2026? Because is there a number that you're putting out there?
Well, for Nifty 50, we're seeing basically around a 13 and 14% upside to the Indian equities, which is quite a lot. Yeah. Yeah.
No, that's fair. I also want to counter that by making a couple of different points. The combination of slowing nominal growth, which has already been questioned by anyone who's looking at India's data and saying that it's fragmented, it's not perhaps accurate, it's following an old model. Second, we've talked about high equity valuations, and we have seen that this retail buying frenzy is giving fire to certain ideas that the retail market is a bubble. If you combine all of these factors, then does your 13-14% outlook rise for 2026 stand? And if it doesn't, how much lower does it go?
Well, I would say that a lot of that would depend upon what is also happening outside as well, right? Because what India does offer is a relatively insulated market, right? It's relatively domestic versus, let's say, the other major markets out there. So if there were to be any volatility outside, right, let's say in the US, for example, then we can see that the Indian equities can become a relative safe haven versus other equities. So that's what we see. In terms of the domestic market, we always still point out that on a relative basis, it is still outpacing the other EMs. And I believe that's an important factor people should be looking at for 2026. Because 2026, in general, there is going to be some volatility ahead on a global market basis. I want to emphasize that point, especially on the uncertainties on the AI front, and also the midterm elections in the US. Right.
Yeah. No, you mentioned safe haven. India could be a safe haven. And my question that I'd written down for you was effectively around AI trade and whether India is the hedge against it. India's AI story has been a bit, let's say, not clear. There are not many AI-based companies that are boosting the Indian market or in the headlines. And you're saying that India as an entire market could be a safe haven, but others are saying that if you're in the AI trade business, perhaps you should hedge your bets and invest in India. So I just want to get a sense of that.
I would say that having the uncertainty, unclearness of proposition for AI for Indian market was one of the reason why it has underperformed in 2025. But that does not mean it's going to underperform in 2026, because the AI on the global stage, it is at a critical time, should I put it this way, when people are starting to be questioning, what is the next step? Basically, the way people see it is that they're uncertain about how the AI companies are financing for the expansion. That's the key point for 2026. A number of the hyperscalers, a lot of the big caps are starting to be tapping the debt market, which people don't like. People want the free cash flow generation. So that's the reason why we're going to see sporadic volatility ahead in the AI trade. And if that's the case, then India can benefit from the fact that it is perhaps not as levered to the AI plays, and therefore it's going to benefit in 2026 if there were to be such volatility.
We are expecting India to find its feet when it comes to being levered to the AI trade. There's a big AI push coming in India. India is hosting the AI summit in February. Also, there's a lot of money coming in from the Bank 7. There is a push for the semiconductors in India, but perhaps that will play out in 27 and perhaps closer towards 2030. You talked about domestic investors. So the question really has been, if the AI situation is a bubble, in India, the retail investor is in a bubble territory. And at the same time, you have these FII sell-off and these FPIs exiting about 1.51 trillion rupees, while domestic investors have infused about 5 trillion rupees through these SIPs. Where do you see this go? Because you believe FPIs will start to come back, FIIs will start to come back. But by how much, and will it be significant?
Yes, so we do believe that the foreign investors are going to be coming back in 2026. Now, how significant would that be? Again, it's going to depend upon what is happening in the other markets, right? So if there were to be more volatility around outside, then we expect more of the foreigners coming into the Indian market. So it really depends on what happens outside. But I would like to say that there's a hard fact out here that in terms of the US equities, which we believe is the majority of the foreign investors' money, that in the midterm years, statistically, since World War II is the worst performing year. So since World War II, only 55% of the time would a midterm year deliver a positive return for the US equities. And the return for a midterm year is around 4% versus double digit for the other years since World War II. So that's a hard statistics that one needs to remember. And right now, given the fact that the Republicans, may not have such a strong showing in the midterms, that can be some volatility ahead for 2026.
No, that's fascinating. We're going to have to just understand a little bit more about your point that the concerns around valuations may have been legitimate, but they're reducing. That's what the statistics are suggesting. But I also want to make this point that when it comes to the IPO frenzy, and that there have been uneven returns with 40% of some 108 firms since 2020 trading below their offer price. Around half of the 350 plus IPOs this year, they have traded below their offer price. I'm just trying to get a sense of why you believe this is going to be a positive scenario for the retail investor.
Well, basically, if we're looking at IPO markets, typically what we notice is that it is very liquidity driven, right? That's the honest truth. Whether it is for India or for the other markets, that's from my own experience. And if you see it, if you compare that to the 2025 environment, the fact that you have the US, the AI companies doing very well by and large, okay, for most of the year. Also, in terms of the other big market in the EM, i.e. China, coming back, very, very strong, then it is natural that, in terms of liquidity support, you would be having less of that, right? So my point is that in 2026, if the other markets are having uncertainties, then the relative insulation of India is likely to be a plus.
Okay,
so
that's
what
a good
we
point.
need to remember.
Yeah, no, that's a good point about midterm years not historically having much success for the markets there, and therefore India might have a chance of having a bumper year. Thanks so much for that, Daniel Lamb, Standard Chartered Wealth Solutions. Much appreciated. Please go ahead and enjoy this holiday season. Thanks so much for joining us. I look forward to seeing you in 2026. All right, U.S. markets, they closed higher overnight. We were talking about that with the S&P 500 notching up a record high at the close. We got data overnight showing the U.S. economy expanding at its fastest pace in 2 years, growing 4.3% in the third quarter and easily beating economic forecasts. But other data was a little more mixed. Consumer confidence fell. Factory production was mostly unchanged. Traders were little influenced by the data, and they still expect at least 2 quarter-point cuts next year. Next year will mark the 30th anniversary of former Fed Chair Alan Greenspan's call to keep rates steady, correctly predicting that tech investments will result in higher productivity. Now, the current and next Fed Chair will have to make a similar decision to assess what impact the AI investment boom has on setting rates. CNBC's Steve Leisman tells us more.
2026 will mark 3 decades since Fed Chair Alan Greenspan made one of the most important and toughest calls of his 17-year career. His colleagues wanted to raise rates, but he decided all of the investment in technology back in 1996 meant he could run the economy hot with higher growth and little fear of inflation. Among his colleagues, Janet Yellen, who would go on to become the chair of the Federal Reserve, and Alan Blinder, who urged Greenspan to hike rates. But Greenspan, he was right. Inflation plunged, and he held the line on rates for 3 years. Fast forward 30 years, and the current Fed chair and the next one face a similar call. Will the AI investment surge create a productivity boom that means lower rates for longer and stronger growth without inflation? New York Fed President John Williams said last week it's already informing his view of monetary policy.
What we've been seeing, which is actually very good productivity growth over the past few years, around 2% or so. So that's already happening, and I think that's going to continue for some time. I don't have a crystal ball that tells me what productivity will be, but if the AI boom does turn into a sustained period of productivity growth in the U.S., then I think those are the kind of developments we would expect.
There are risks. The administration's immigration policy means the labor force may be closer to full employment and potentially closer to generating inflation in a hot economy. Tariffs and higher inflation already raise the risk that growth could run too hot. And most important, as former Fed Vice Chair Rich Clarida points out, Greenspan eventually had to ratchet rates up. He said in a recent blog, productivity growth raises supply and thus tends to lower inflation pressure. It also encourages demand through higher investment and the wealth effect from booming stock markets on consumption. And that is ultimately the Fed's job. Don't stop the punch from being served, but take away the punch bowl before things get out of hand. Steve Leisman, CNBC Business News.
Steve Leesman there giving us that perspective. Before we go for a short break, we're going to take a look at gold prices this morning. Crossing the 4,500 mark today after climbing 4% just this week. The Santa rally is certainly shining in gold. And currently, you're looking at 4494.95, jumping around there. Stronger U.S. growth data alongside expectations of easier monetary policy causing a bull run. Gold is up about 70% this year, on track for its strongest annual gain since 1979. Silver, platinum, and palladium all touching fresh record highs in the last hour or so. Inside India, we'll be taking a quick break. We're back in 2 for more. Welcome back. This is Inside India. Some of the stories we're keeping tabs on. Let's give you a sense of that. The first, the U.S. Justice Department released a new batch of files related to the investigation of convicted sex offender Jeffrey Epstein. U.S. President Donald Trump's name appears many times in these latest documents. In one email, a New York prosecutor says that flight records show Trump flew on Epstein's jet 8 times in the 1990s. Trump has acknowledged his previous relationship with Epstein, but claims it ended in the mid-2000s, and he was never aware of Epstein's crimes. The Department of Justice has responded to the new release, saying some documents are untrue and all claims are unfounded and false. Also, a state in Australia has passed sweeping new gun and anti-terror laws in the wake of the recent mass shooting at Sydney's Bondi Beach. The New South Wales Parliament passed the measures this morning. That's within 10 days of the incident, after they cleared both houses with support from the ruling Labour government and the opposition Liberal Party. However, the rural-focused National Party voted against the gun changes, warning they could disadvantage farmers. Under the new rules, most gun licenses will be limited to 4 firearms, while farmers may own up to 10. Police will also be granted more powers to restrict protests and to ban the public display of terrorist symbols. Also, India has announced a $450 million reconstruction package for Sri Lanka to aid its recovery and reconstruction in the wake of Cyclone Ditwa. The extreme weather event caused heavy flooding and damage to critical infrastructure and facilities. India's External Affairs Minister S. Jaishankar met with Sri Lankan President Dissanayake on Tuesday and committed to the aid package, reaffirming India's pledge as a first responder under Operation Sagar Bandhu. Over 640 have died, with 183 still missing since Cyclone Ditwa struck Sri Lanka on the 17th of November.
The assistance package that we have proposed is worth $450 million US dollars. It will include US dollars 350 million in concessional lines of credit and US dollars 100 million of grants. This package is being finalized in close consultation with the government of Sri Lanka. Our assistance will cover sectors worst affected by this cyclone.
Now, after a muted 2024, IPOs have returned with a vengeance this year across the world. In India, the fundraising hit record highs and nearly 350 companies have gone public in just the US this year, which is 55% higher than last year's total. And more private companies may look to tap into that public market. CNBC's Leslie Picker has more details.
For years, many of the biggest private AI companies, think OpenAI, Anthropic, Databricks, have shunned the public markets. But bankers say that may need to change next year as the CapEx cycle crosses a threshold where private-only financings become too constraining. McKinsey research shows that by 2030, data centers equipped to handle AI processing loads are estimated to require more than $5 trillion in CapEx. Private AI companies have been able to spend tens of billions of dollars a year on CapEx, but this next phase will require more funding through the debt markets. And it's more efficient and less expensive to access credit as a public company. Here are a few reasons for this. First, having a public equity gives lenders more certainty on real-time valuation, which can allow a company to take on more debt with tighter spreads, a lower cost of capital. Additionally, suppliers and partners typically sign 10 to 15-year contracts, meaning counterparties want to be sure that there's financing durability over the long term. Now, to be sure, there's this question about how many of these companies can go public at the same time, whether the market will be able to absorb all of that supply. For example, if OpenAI raised at a $1 trillion valuation, as has been reported, and floated just 10% of the company in an offering, that alone would be well more than all of the 340 IPOs raised in the U.S. this year combined. For CNBC Business News, I'm Leslie Picker.
And as we talk about IPOs, a quick update about IPOs from India. One of the key companies that we're keeping tabs on for a listing next year is hospitality firm Oyo. Oyo Hotels parent Prism has won shareholder approval to raise up to around $742 million through a fresh share issue as part of a proposed IPO. The approval gives the company flexibility on timing after multiple delays, including opposition from major shareholder SoftBank. Oyo reported a 16% rise in annual revenue and its 12th straight EBITDA positive quarter, supporting renewed listing plans. All right, coming up, the U.S. unveiling new restrictions around H-1B visas. Indians might not be so lucky anymore as the lottery system gets scrapped. We'll be back to discuss this in detail. Stay with us. welcome back. This is Inside India. We're counting down to the market open in just about 15 minutes. This is how we are shaping up at this point in time. We're looking, well, at a bit of a jump from 26,177 yesterday's close to about 26,230. That's what we're seeing. We're seeing also that the Indian rupee, while it's weakening at this point in time against the US dollar, it is in general trends, it has been effectively strengthening against what we saw last couple of days. We hit 91 also, a record low for the Indian rupee. It is one of the worst performing currencies of the year, but we are seeing RBI intervention. There is all kinds of reports around how much the RBI is intervening. We also have to keep in mind a couple of different aspects, that gold and silver are on record highs. How much of that is playing into the market sentiment? We're watching this place very closely. We'll see in about 15 minutes how the markets open. But away from the Indian markets, the US announced new tariffs on Chinese chip imports overnight, but said it would delay enacting it for at least 1.5 years in honor of their trade truce. Elaine Yu has the story. Elaine?
Hey, Amitar. So the U.S.-China trade saga goes on. The Trump administration says it will impose additional tariffs on Chinese chip imports, but not until June 2027. And that rate will be determined at least 1 month in advance, it says. So the White House is upping the ante, but also delaying it. So showing that President Trump is still prioritizing cooling tensions since he struck the trade truce with President Xi back in late October, where the two sides suspended various tit-for-tat measures. But this move by the U.S. Trade Representative Office has accused China of unfair trade practices when it comes to the semiconductor industry, which is why it's imposing these new tariffs, it says. And the office says for decades, China has targeted the semiconductor industry for dominance and accused them of employing increasingly aggressive and sweeping non-market policies. And they're saying that their targeting of chips for dominance is, quote, unreasonable and severely disadvantages U.S. companies and workers and the U.S. economy and creates economic security risks from dependencies and vulnerabilities. Now, this is on top of the existing 50% currently on Chinese chip imports. And the context to all this is that it's part of an investigation that started a year ago. So during the Biden administration, that was focused on the older so-called Chinese legacy chips. So the U.S. is now moving ahead despite the truce, but it looks like it's still wanting to honor that by delaying it for now, at least.
Elaine, has China responded to that move yet?
So the Chinese embassy in D.C. said in a statement that to politicize and instrumentalize and weaponize tech and trade issues, it says is destabilizing the global industrial supply chain, saying that it benefits no one and will eventually backfire. So coming out with pretty strong language, also saying that they will take all measures necessary to safeguard their rights and interests. So they are focusing on the fact that there are these new tariffs and not so much on the delay. So this could all inject fresh uncertainties to the trade relations heading into the new year, and this is something that investors will be bracing for, although we see that both the Chinese and U.S. sides have been making good on the trade truce so far, some of the promises from soybeans and other things, and it sounds like the two sides don't want to stir the pot too much, especially ahead of President Trump's expected visit to China in April. But meantime, China is also doubling down on its self-sufficiency drive, and this is something that investors are also looking at very closely. Some of them like the narrative, but it's also proven to be very volatile. If you recall, Meta X it listed earlier a couple days ago with an initial frenzy up 700% on its debut in Shanghai, but it's still declined 5%, 6.5% now, showing a bit of not just profit taking at the year end, but also the risks when it comes to China-U.S. trade and all the geopolitically linked names that are attached to it, and also concerns if you compare these chips with some of the U.S. ones, NVIDIA, for example, when it comes to valuation. So it will be volatile markets next year too, as this tech rivalry is only heating up and is here to stay despite the temporary trade truce. Amitosh.
Thanks so much for that, Elaine. In the meantime, the Trump administration also continues to tighten visa regulations. The Department of Homeland Security has announced major changes to the H-1B visa program, replacing the random lottery with a weighted selection system that favors higher paid, higher skilled foreign workers. The annual cap remains unchanged, but employers offering higher wages will now have better odds. Officials say the move will protect American jobs and wages. The new rule takes effect in February 2026 and applies to the 2027 visa cycle. Meanwhile, multiple reports say hundreds of H-1B visa holders who flew back to India, back home, to renew their visas are now stuck. That's due to the longer wait times as the U.S. mandates increased social media scrutiny for visa issuance. What you're seeing on your screen, 71% of all H-1B visas issued in FY24 went to Indian nationals. Joining us to discuss this and more is Emily Newman. She's an attorney at law at Reddy, Newman, Brown & PC. She's joining us live from Texas. Emily, thanks so much for taking the time during this holiday season. A happy Christmas to you. Happy holiday season. I want to start by just getting a sense of the numbers, because this is difficult. How many clients or companies have had employees stuck in India at this point in time?
Yeah, within the last 2 weeks, we've heard from at least 100 different employees who have traveled over the holiday season only to have their visa interview appointments canceled and rescheduled until 2026 and some even into 2027.
When you talk about these employees, about 100 of them, we've heard reports that it could be as much as 1,000, because you're just one immigration lawyer. There are others also. But how are the clients supporting them? How are the big companies, the Amazons, the Metas, the Microsoft? Because most of the control that is on the H-1B visas in terms of how many they get allocated is in these big 7 companies, really.
Right. I think many companies are trying to work with their employees to allow them to work remotely so that they can continue their work and continue important projects when that's possible. But there are a number of employees who don't have that option, who have jobs that require them physically to be in the United States. And for those people, the employers are trying to hold out as long as they can in hopes of getting an expedited interview appointment. But that remains to be seen whether those will be allowed.
We've already seen a federal judge, on Tuesday, rejecting a challenge by the largest U.S. business lobby group to Donald Trump, President Donald Trump's 100,000 fee on the new H-1B visas. That was rejected. But you have a situation here where those who have traveled abroad may now lose their jobs, may not be able to return home to their pets, to their families, to their kids, perhaps, their wives, perhaps, who are on H-4 visas, a partner visa. What do you see happening in this context?
Yeah, that is a really big concern, particularly with this additional $100,000 fee, because it only applies to employees who are outside the U.S. at the time the petition is filed. So for these individuals who are stuck outside the United States, if their petition expires before they're able to get a new visa and come back, or if they lose their job and another employer wanted to hire them, they would have to pay the $100,000 filing fee in order for them to get that visa and come back into the U.S. So it really is stranding these people outside the U.S. And you're right, they do have homes here, they have wives here, husbands here, they have U.S. citizen kids here in many cases, and they're really stuck between 2 countries right now.
What are you hearing? Because we'll talk about the tangible in terms of how this impacts both the U.S. economy and the Indian economy in just a bit. But I want to hear about the human angle. The intangibles. What kind of calls are you getting from the 100 or so individuals who you've spoken to? What are you hearing from other lawyers? How bad is it for them? Because, the Indian immigrant has been considered the model immigrant when it comes to the American dream. But right now what you're seeing is that that label of alien is there, and that label of, that you're the reason why Americans are not getting jobs. That label is there. But they are living in anxiety also. I've spoken to people I know in the United States, and they tell me very clearly that this is the worst part of living in the United States right now, that they don't know what their future is going to look like.
Right. Yeah. We've had some people who traveled home just to visit family over the holidays. They've planned this trip over 6 months ago because it was so hard to get an interview appointment. So they planned the trip, wanted to come home, have a great family reunion, get their visa interview appointment, and come back to the US and back to work in January. And now that simple family holiday trip has turned into a nightmare. We have some people who went to India for their marriage. And now they are both stuck in India and not able to get back and at risk of losing their careers. So it definitely has an impact on that human factor, and that anxiety just continues to grow as the H-1B becomes such a target for the Trump administration.
What are you advising them right now? Because the chances of any legal challenge to this cancellation, this sudden abrupt cancellation of their appointments and pushing those appointments to, let's say, July in some cases, to December in some cases, what is the outlook there? Can this be challenged legally? Is there any hope there, or what are you advising your clients?
I think it's very difficult to challenge in the courts because consulates have a lot of power and authority, and it's very difficult for a judge to tell a consulate how to schedule its interview appointments, how many appointments it has to accommodate in any particular day. So more importantly, it is, using political power in order to perhaps get congressional members to reach out to the Department of State to urge them to open up more appointments or make appointments more available for people who are stuck in this situation. And I think from that, it's people sharing their story, sharing their issues that they're having to get that advocacy going is really the only way we're going to see change here and get those appointments opened up. For our particular clients that are dealing with this, we're having their employers reach out to their congressman. We're having the employee request an expedited appointment, providing a letter from the company explaining that they're needed on an urgent project back in the United States.
This is extremely divisive even in Congress, and it's difficult for both sides of the aisle to effectively suggest that we're going to be pro-immigration at this point in time. So why do you see that working out? The pressure from companies, the pressure from voters or friends of immigrants following that American dream, calls made to congressional members, pressurizing them to kind of have Congress step in. Why do you see that being a success? It's such a divisive issue. Do you see any positivity there?
We have had success with that in the past, even during a prior Trump administration, with issues of long delayed cases and things that were happening with the U.S. Immigration Service here. And so we feel like that's the best way to accomplish it. And ultimately, this is really just a logistics issue. There's nothing from a national security standpoint that should cause the State Department to need to block these visas. I think that this was done at a very busy time of travel on purpose by the Trump administration as a way to delay people getting back into the United States and keeping them outside the United States, because the Trump administration is very anti-immigrant, even legal immigrants. But there are definitely congressmen and senators who understand the importance of business, understand that these people are professionals that are providing value to their companies as well as to our economy.
I'm interested in what you just said, that this is not necessarily, in your view, a national security or public safety issue. But just to make this very clear to our viewers and also have you weigh in as a counter question, the State Department has told visa holders their interviews were being delayed after the implementation of the Trump administration's new social media vetting policy. Basically, they're watching everything you say or write to ensure that no applicants pose a threat to U.S. national security or public safety. So it is, in their eyes, a matter of national security. Also, Trump has suspended the U.S. green card lottery in the wake of the Brown University and MIT shootings. That itself is a security issue, although they're not entirely connected, but lines are getting blurred right now. So how do you counter that?
Well, the Trump administration has had access to the social media handles of all visa applicants since his prior administration. They changed the visa application form to require everyone to share all of their social media. So they've already had this information. The only change is they're forced to make their particular profiles public as part of the application process. But for the vast majority of H-1B and H-4 holders, these are professional people. They are working in skilled jobs. They are coming here for the purpose of work and employment. They are not security threats. They are not people that are, posting negative things about the administration or about, pro Hamas or anything like that. These people are just here in order to work. And so it's not really a national security issue. They've already been able to vet these people multiple times before.
Is there any news that you're getting from your clients or anyone else really suggesting that the Indian government is stepping in, trying to help? Because right now we know that a particular reply in Parliament from the Indian government basically said that since this 100,000 fee proclamation took place on the 21st of September 2025, there is no comparable data yet to demonstrate an impact on Indian nationals, because it is a bit vague at this point in time, and numbers will only reflect through research a little later.
Right. I have not heard of any efforts from the Indian government in order to get involved in this. And as far as the $100,000 fee, the reason that we haven't heard a lot about it is because it's not going to have as big of an impact until we get into next year's H-1B lottery season, because it only impacts individuals outside the United States. And the majority of people that would be filing in that situation are people that are subject to the cap, meaning they have to go through the lottery. So it's a smaller portion of people that might be outside the US right now that are not subject to the cap and would have to pay this $100,000 fee. I don't think you've heard of anyone who's actually paid the fee yet. I do know there are a lot of organizations, companies that have requested a national interest exemption through the policy and procedure that the government put forward, and they've not received any responses on those so far. And those have been pending for over a month now.
Could you tell us whether they are associated, those groups, those groupings, those lobbying firms associated in any way to the Indian IT firms? Are you hearing anything about that?
No, these are typically employers who are hiring cap-exempt H-1B holders. So, for example, universities, healthcare institutions, those types of employers are the ones that are requesting the exemptions right now, because they actually have petitions that they could file today, but for this $100,000 fee that they don't want to pay.
What are the chances that new companies will actually hire with this 100K fee?
Based on talking to my clients and with our firm, I think it's practically zero. I have not come across one employer yet who is willing to pay $100,000 in order to get an H-1B visa.
What does that do to anyone who wants to pursue the American dream, and not just Indians? Remember, 71% of H-1B visas go to the Indians. But what does it do for them? Like, how do the companies accommodate them? Just give us a sense of that.
Yeah, I think companies are focusing more on finding individuals who are in the United States in order to sponsor, because if they are able to file a change of status, that $100,000 fee does not apply. So the pool of employees for this upcoming lottery is going to look quite different this year compared to prior years because of that $100,000 fee. People are not going to be sponsoring from outside the US. They'll sponsor people inside the US, which might actually help F1 students who've graduated and are on their OPT and pursuing their H-1B after that. They might actually have better chances this year compared to prior years. But it does make it much less stable for people who are outside the United States and have that American dream wanting to come here. It may not be an option.
Okay, I'm interested in what you just said, the F1 and the OPT. My experience has been that people I've spoken to have suggested that now companies interview them just for the sake of interviewing them, and eventually they tell them that, sorry, because you're on an F1 and an OPT, we don't want to hire you because we'll later have to figure out the H-1B visa situation. And now that situation has got worse anyway. So the idea that you're going to get future employment because you go to an American university is almost dead and buried. Correct me if I'm wrong about that, but also just give me a sense about one other thing, which is that companies are finding it difficult to replace talent, the H-1B visa talent, finding that expertise that you've seen in Indian talent or Chinese talent or otherwise in the US, and that will have a larger impact on the US productivity and margins.
Right. I mean, the companies that I work with oftentimes will come to us after they have tried for months and months and months to fill a position and find the talent that they need. And only at the end of all that do they say, okay, we need to hire this person. They might be on OPT. We know it's going to be difficult to get them on a long-term visa path, but it's our only option at this point. Otherwise, I think those jobs might end up being moved overseas. You might see more people being hired out of Canada or Europe or even in India to work remotely on these projects, more offshoring because they can't get the talent that they need in the US.
Yeah, I'm already hearing that people are trying to relocate their employees to Mexico or Ireland very quickly because we're completely out of time. I believe that this is a bit asymmetrical. Tech companies had to freeze that perm process, that first step that you actually take to go ahead and hire an individual from outside the United States. The government is not supporting these H-1B renewals, but the perm first step to H-1B visas was paused by the Mag 7. Some stopped it, some slowed it. What's the status there?
Yeah, I do believe some of them have started back up again. There was some news about, I think, Google moving forward with their perm process. But yes, a number of them had to pause their process because they could not successfully complete the recruitment stages.
Got it. Thanks so much for that. Emily Newman already indicating to us that this has been in the works. Companies have been preparing for it. They've been recalibrating. Much appreciated. Thanks so much for joining us, and happy holidays. All right, time for a short break. The Indian markets have joined the trading day. We'll be back with the movers in a bit. Welcome back. Indian markets have come online at this point in time. A muted start for Nifty 50 as was expected. This is the holiday season. You can expect muted volumes in the Indian market and of course everywhere else. But we're also seeing that the Indian rupee at this point in time in the early hours has weakened against the US dollar. We have been seeing though a different trend. We have been seeing that it has strengthened a bit after RBI intervention. We will have to see how this plays out today. But also, let's give you a sense of some of the stocks, the Indian IT services firms that we're watching very closely. Analysts warn that new US H-1B visa norms could hit Indian IT majors like TCS, Infosys, and Wipro, raising costs and forcing changes in hiring strategies. A report by MK says growth in India's IT services exports could slow to below 4%, hurt by sharply higher US visa fees. That's lower than its earlier estimate of 5% growth in FY 2026 and a 7% growth rate over the next 5 years. That's what you can see on your screens, all of them down at this point in time. Wipro almost 0.77%, Infosys 70%, and HCL 4.6%. Wow, that's quite interesting. We'll be watching that space very closely. Now, let's also give you a sense of the air that Delhiites and North Indian folks are breathing right now. Pollution continues to choke Delhi and its surrounding areas. The air quality index turning severe, hitting 412. It's almost always in the last couple of days been at that level. Regulators retain that transport is still the leading cause for the smog. The Delhi cabinet has ruled out more measures aimed at tackling the issue, now approving an allocation of funds to restore water bodies in the city. Some 10,000 classrooms are also set to be equipped with, guess what, air purifiers. Delhi's education minister stressing that the health of children would not be compromised. The government sharpening its criticism of the previous AAP or Aam Aadmi Party government, alleging that air pollution was used as a political tool instead of being addressed through long-term structural measures. Well, that's all the time we have today on Inside India. This is the last edition for 2025. So we're wishing everyone watching a Merry Christmas and Happy Holidays. We'll see you in the new year. Stay with us because Access Middle East is up next. Happy holidays.